Don't day trade unless you know your market. Hi, I'm Marv Eisen of Timeless Dollar, and I've been trading the E-minis for over 20 years. And I can tell you that knowing your market is so important in being successful. When I start my day using a trading range that I develop using the calculations from Taylor's book method plus a few others, and I establish a trading range on my chart, and I do this the night before, so when the market opens, I have a rectangle that I draw out on my chart denoting where the market is most likely to trade. I also draw a horizontal line on my chart to indicate where the market closed the previous day. And I do this because the market, if it opens gap up or gap down, there's a 75% chance that it will fill that gap. It will revisit that price. So if I know that the market is going to, let's see, this is at 46.66, where it closed the previous day. If the market opens up somewhere above or significantly below, I'm looking for the market 75% of the time to move to this price here, 46.66. And typically, and this is what happened yesterday. Took a long way to get there, and it wasn't a sure thing yesterday, believe me, because typically the gap fills relatively soon after the market opens. Didn't happen on December 10th. This is a December 10th chart. It took an hour and a half to finally fill the gap. So this was a high percentage trade, although difficult, because as you can see, the market gyrated so much in getting there. The second trade of the day was the symmetrical time and price trade. And this is a trade that takes some practice in learning the pattern that develops and how the market moves based on this pattern. I won't go into it here. I do teach it in my E-mini trading course at timelessdollar.com. So this was a possible trade yesterday. The market gyrates the rest of the day. And so I'm waiting at 3 o'clock to see if there's going to be a market trend. Now, this afternoon trend was a relatively high percentage trade, and here's why. First of all, the stochastics were oversold. But that's not the reason to take this trade. I know that the market finishes in an opposite place of when it starts, of where it's been. And since the market has been down here in the morning, it's highly unlikely that the market is going to revisit these lows. Typically, when the market reaches a low in the morning, it finishes the afternoon at a high, and vice versa. And that's why I took this to be a high percentage trade, and in fact, it was. And this happens all the time. But unless you know your market, you don't know these things. So if you're looking for some education in trading, take my course at timelessdollar.com. I'll send you these Taylor numbers and I'll show you how to use them. I'll teach you these trades and how to read them, the symmetrical trade, the trend trade, the gap trade, and there aren't really too many others that you need to bother with, because what you're looking for is the high probability, low risk trades. Thanks for watching. I'm Marv Eisen of Timeless Dollar. Remember, when you trade, be patient and be safe. I'll see you in my next video.